Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's May the 4th, 2012, and as we do every Friday, or almost every Friday, we'd like to go over all the major markets that we track at PerfectStockAlert.com so that you guys know everything that I know moving into the week ahead, looking at all the charts. So no matter what you're trading, you'll know what I'm thinking. And what I'm going to be looking at as well for the week ahead is for as far as opportunities go. We'll start off looking at the Australian markets. This one, we actually got stopped out of a lot of charts, let's see, I should say this week. But some of them we got back into, and this one we didn't. This is the Australian market, like I said. We see major resistance on a longer-term chart. This is a short-term chart, but the longer-term chart shows there's major resistance at this point up here, and that's why we're just not trying to take this as a buy opportunity, even though we broke out here. We told you we wouldn't do that. We, in fact, tried to take it as another short opportunity. We got stopped out, and then she rolled over anyway. So I'm just going to leave it alone for now. I wouldn't be a buyer, of course, but I'm not going to be shorting it at this moment either. The Dow Jones Industrial Average, we were stopped out of this one as well, almost exactly like we were the last time on the major peak up here. We got short and got stopped out by a couple of bucks, and then she rolled over anyway. This time, basically the same thing. We saw this shooting star formation, lower series of highs, lower series of lows, and next candlestick formation. Took it as a short with a tight stop. We get stopped out a couple of bucks, and then she rolls over anyway. That's twice now that this thing's done that to me. I'll look for another opportunity to short it. I didn't jump back in on this one. Hindsight 2020. I wish I had, but I didn't. If you did, and you're still short, nothing wrong with that. Stay that way. This right now, I'm looking at this chart, seeing the triple top. You got the first one here, the second one here, and the third one here. I want to be looking at this low point down here. I don't expect this to be the true bottom. I expect we will take this out. Eventually, we will work our way down here again and close below this support line here. Once you've done that, you can measure this distance here and subtract that mathematically from the breakout point. You get an idea of how low you expect this to go to give you a target. So there's a big move in the markets to the downside that I see forming here. So I would, again, stay looking for short opportunities. At the moment, I'm not going to jump into this one, but if I get any move back up in this range here, I'm going to definitely take it as a short opportunity. The French CAC 40 index. This one I would actually take a short position on. We talked about this before. You had this nice head and shoulders formation here, the first shoulder, the head, and the second shoulder formation. The neckline was broken. You measured that distance out. You get an idea of how low she's going to fall before she starts bouncing to the upside here. I want to bring this chart to your attention because you're going to see it on this chart as well as the German chart. There's a potential here for a reversal, and I want to kind of debunk that. I mean, I see it, and I know people are going to be talking about it over the weekend, but what they're going to be talking about is you've had this sell-off here from this high point, and you've sold off pretty good, and then you get this little kind of a wiggle situation here. Well, actually, it would be, let me clean that up. Try that again, right? All right, what you got here is a sell-off here. All right, you can call that the first shoulder of an inverted head and shoulders, the head, and then the second shoulder. They'll be looking at this saying this could be an inverse head and shoulders pattern with a reversal back to the upside. This being the neckline here, closing above that, would be confirming the inverse head and shoulders pattern. They would then measure this distance here and mathematically, and then add that to the breakout point and give them a target for how high they expect price to go. That's a possibility if you could get the markets to stop selling off next week and get some kind of news out, some kind of good news to push markets higher. You might see that. However, there's something you should know about inverse head and shoulders patterns as well as head and shoulders patterns. They typically have a long or prolonged advance before they form. For example, you have several months actually going back here of a rally before you get the head and shoulders formation. And that's important. That's a requirement there for that to form. If you see one and you haven't had a rally beforehand, you can't have a major peak of a rally of the head and shoulders formation because you haven't had a rally to start with, right? Well, in this case here, you've got a little sell-off and then this formation. That's not as trustworthy to me. You want to see more of a sell-off. It goes on for several months, 6 months preferably. So that's something else to be somewhat cautious of. But I do see that on the chart as being something that is possible. It could happen. So if we started to see a reversal and move in that direction, there is a way to play that on the long side if it sets up as we're talking about. But right now, obviously, I would look at this as a short opportunity, looking at the continuation of the downtrend. High point here, continuing to move lower here, low point here, lower low here, and we're now moving lower to test this low again. If we stop and reverse immediately the next day, or the next 2 days, then I could understand some concept of an inverse head and shoulders pattern. But otherwise, I'm going to ignore that for now and just assume this is going to continue to move lower. German DAX composite, same overall story we've talked about with the other French markets. You've got this move to the downside that you've had here, and then you're starting to form what looks like an inverse head and shoulders pattern, but it's not confirmed yet. You won't have to have confirmation until you break the neckline. An inverse head and shoulders pattern is the same thing as the head and shoulders pattern. It's just flipped upside down. So you've got the shoulder formation here, then you've got the head formation here to here, and then you've got the next shoulder formation potentially happening here. So what I'm going to do on this one, because we've already short back here, is take the stop that was way up here and advance my stop. Now I'm going to lock in a little gain. If she keeps moving lower, great, I'll keep following my stop lower. But if she reverses on me, I don't want to be sitting there with a gain and then see it get erased on me, right? So that's something to consider. If you're going to draw the neckline, you look at the high point here, the higher high here, you draw it like this. Also, when you're looking at an inverse head and shoulders pattern, if the slope of the neckline is like this and you get a breakout above that, it's more bullish than if it's the other way where you've got the shoulder dipped higher and then you had it like this, because then your slope would be negative like this and it wouldn't be as bullish. So it's more bullish on the German market than it is the French market. If you understand what the heck I'm talking about, then you can kind of see that maybe developing if we get some kind of good news out of the market next week. Otherwise, stay short. Gold, we talked about this last week. Also, you had several consecutive days to the downside. We talked about this before. When you get multiple consecutive days to the downside like that, you're like taking a rubber band and stretching it out. It's not going to be sustainable. You're going to eventually have a jerk back in the other direction. So that's what we get: 1, 2, 3, 4, 5 consecutive days to the upside. However, we told you we wouldn't buy it because there was really no trend change here. All you were doing was moving sideways, and you weren't even breaking out of the previous high point here. So there's no real reason to be a buyer. That was proven right as we sold off a couple days later back down to where we started at. I see still nothing here that I want to be a buyer of. We're just moving sideways right now, and that's something that's going to be pretty obvious on a lot of charts you're going to look at today. But the main thing I want you to look at when you're looking at these sideways moving activities, a lot of these charts are already breaking down, as I'm going to show you in a moment. So if we're looking at the global markets and we're wondering what's going to happen with this sideways moving activity, well, if a lot of them are starting to break down, then you can kind of look at those as leading indicators and expect them to also break down. So just something to think about. The Hong Kong Hang Seng Index has made a series of higher highs and higher lows, changing the downtrend to a potential, well, actually not a potential, it is an uptrend right now. We tried to short that, or a potential situation here with a series of lower highs. That did not work out, and we just left it alone at this point. And I'd still leave it alone. I don't want to mess with it as long as the trend is going against the call. I would just rather wait for the trend to shift to a downtrend, and I can short it, or give me a better entry opportunity, and I'll think about buying it. But I'm not going to buy it if it's the only lone market in the global markets there that are going up. That's not going to be it's not going to last very long. So keep an eye on it. But if the markets do start to get bullish and you see a pullback in the Hong Kong Hang Seng Index that you want to trade from the long side, your trend is now up. The India Bombay Stock Exchange, or the BSE, this one finally broke down. We talked about this, let's see, several different times. We were basically moving sideways in this range here. We don't like to really trade that, so once we realized we were moving sideways, we just stopped trading it. We want to not mess with them until they break in one direction or the other. You can see on this one we've updated the annotations and showing that you have a negative slope here, showing that the sell pressure was increasing on the downside there, and then your support line right here actually broke down. You can see today's activity closed well below that. So we like this as a short opportunity. You can see a move, a secondary move, like in the next day or two, to come back up here and test that support line again. Typically what you'll find at that point is it'll be acting as resistance, and then it'll just ricochet off of that. So if you've missed the opportunity to get short, if you see a move up here to that support line, you can take a short position here, and then this tight stop off the top of that resistance line. I can't even talk today. The EWJ, or Japan iShares, this is another one that had a major drop here, and then we started moving sideways. We talked about this last week, as well as the week before, and we told you in this situation here, you don't really know which direction she's going to break. We don't like it for a buy opportunity, expecting any move to the upside there, because you had major resistance up here, so you didn't have a lot of upside potential there. So the break to the downside doesn't make it's not a shock to us. Another thing you should notice, this is another chart where you've got a sideways moving activity that eventually broke to the downside, just like the BSE we showed you. That's kind of telling you the actual direction you're going to see in the market. Yesterday I did see this hammer form formation and thought the same thing. Yes, you could possibly mark it as being an if and then scenario for long trading. However, there's a couple things wrong with that. Number one, the overall trend is down, so you'd be counter trend trading, meaning you wouldn't expect a lot of gain to the upside anyway. And number two, if the overall markets are telling you you're peaking, why would you go long one individual chart that may be giving you a bounce to the upside? You're not going to have a lot of momentum to the upside when all the other markets are going selling off, and that's what happened the very next day. You sold off, breaking that low anyway, so now it's nil and void. But the main thing is to think about it not just in one single chart, but all the other charts taken together. What are they all telling you? Looking now at the FTSE, or the London Financial Times Index, we've talked about this one before. You notice you have this little trend that was starting to form to the upside here, and a lot of guys were getting bullish on that situation, but I didn't like it. I didn't like it for a really simple reason. No hammer candlestick formation here, here, or here. So when you're finding these bottoms and you're finding no hammer candlestick, and then we jump to the upside, and then we go down here, find a bottom, jump to the upside, and then again no hammer, and then we do it again. This is not a true bottom. What you're doing is bouncing around in counter trend trade, but in reality the true trend is still overall down, and so we expect this low point will get taken out. One other item I'd like to point out regarding the FTSE. When I was showing you a moment ago, I showed you the French markets as well as the German markets, showing there was potential for an inverse head and shoulders pattern. One of the things you want to learn to do is take charts that are similar and see is the same signal being portrayed on all of them. If it's not, there's some lack of credibility to the signal. So when you're looking at France's markets or Germany's markets, you're seeing inverse head and shoulders pattern. But then you look at Europe's, London Financial Times Index, and you're seeing that there's not one there, and that kind of discredits the inverse head and shoulders pattern as well. So again, I don't see a lot of bullish potential in this market right now. I'll be looking for short opportunities. 5 days ago, this day right here, we issued a video. We just covered the NASDAQ. That's all the video covered. We titled it something like "The Peak is right in front of you" or something like that. That was on that day. So on that video, we got like 8 dislikes. They disagreed with our analysis. Right now, there's 8 people that are going to need a moment to themselves to cry a little bit because they were wrong. And how do we know that? Well, it's pretty obvious. Right there. When you've got a major gap like that on a major market chart, the odds of that being a sustainable rally to the upside are very slim. So you want to be looking for short opportunities. We took that opportunity. We're making money. You can advance your stop. Another thing I like to draw your attention to here, lower close here than you had here. This isn't a real bottom. You're going lower. Looking now at the oil index XOI, you can see we are obviously in a downtrend. You also notice we had this temporary sideways moving activity. We did break below it first thing intraday wise, but then we climbed back up to that point and we started rallying from that point. I didn't like this and I wouldn't buy it because this again was not a hammer formation. Neither was this, or this. All this telling me this is not really the bottom. And now that we're closing down below that point, I can see that it's obviously not the bottom. We're going lower, so stay with it. Continue to trade in the actual direction of the trend, which is down. Looking now at the UUP, or the U.S. Bullish Dollar Index Fund, this is like if you're trading dollars, and you got to think about it like this. When you trade this one, you see a bottom forming. You're basically should be seeing a top in stocks. Because when people sell stocks, they in effect buy dollars, which puts a floor in the price of the dollar and drives it higher, so forth and so on. And so that should make a lot of sense. You're always comparing charts and making sure that they confirm one another. Here we actually got stopped out by a couple of pennies. That kind of stunk, but the actual call was right. But we still got stopped out right here. So eventually getting an opportunity to be a buyer, I suppose. But right now we just have to call that one a missed opportunity. You won't get them all. The Russell 2000 Small Cap Index, this one we have been all over. We're making good money on this one. You can advance your stop if you'd like. The main thing here, we saw this move to the upside. Same major gap that we saw on the NASDAQ here. Didn't like that. Didn't get a hammer formation here or here. We're seeing this as a neckline of an overall formation. It actually starts back here. You get, well, sorry about that. You get this major shoulder formation and the head formation and then another shoulder formation here. Lots of sell pressure at this level. Lots, okay? Whenever you have a situation like that, it's like free money. Anytime you get the market to run back up to that direction, short it. That's just easy money because she cannot break through it. She's tried not once, not twice, but 3 times and failed in every count. This is free money to short. When you close below this neckline here, this little dotted line right here, when you close below that, you'll be confirming the head and shoulders formation, and then you'll take this distance here, all of that, do the math on it between those two price points, and you take that distance and you say, okay, that's how far she's going to fall once she closes below the neckline. So that's a big move to the downside here. Again, this is another chart showing you a big move to the downside. I would be getting short and staying short. I don't want to advance my stop on situations like this too much. Let me clean that up a bit. Not too much, because the situation could shake you out and then go lower anyway. Like I've already said, you've got major resistance up here. So any move to the upside, I want to take as a short opportunity, not be causing it, or not having it stop me out. So don't get too tight with your stops. The S&P 500 Large Cap Index, or the SPX, you can also look at the SPY. You can see that we are in a very clearly defined downtrend here by the high point here, lower high here. That's confirming the change in the actual direction from the uptrend to the downtrend. We can see that taking this low point, lower low here. You can see you're moving down here. You also notice there's no hammer formation here, here, or here. We have not seen the bottom here. Also back here we wanted the same basic thing. This is not a good sign when you see a breakdown of low points that you haven't seen before, and now there's no hammer formation. Something's starting to change. You also notice when you close down here below this red line right here, this 50-day moving average, you're starting to get a sign that your uptrend is breaking down. Now you're seeing it again. Having a look now at silver, and one of the things that told us not to mess with the gold chart last week was that silver wasn't confirming it. Like I just got done mentioning several times in this video, you always want to use other charts to confirm what you believe you're seeing somewhere else. And silver's not confirming gold, then the move in gold wasn't actually all that strong, and it was eventually proven correct. So I don't want to be messing with gold or silver at this time. Silver's still going lower. The Toronto Stock Exchange, TSX, we talked about this one about 3 days ago, 4 days ago. Actually, it was on this day here. We saw this move to the upside. So you had 1, 2, 3, 4, 5 consecutive days to the upside. So that was at the high end of the average. You wouldn't expect 6, 7, 8. It can happen, but like the rubber band scenario I talked about earlier, it's the same situation. They're not sustainable. Also, you were peaking out, showing a little wick out of the top there at the 50-day moving average. What we talked about before, you should find support at the 50-day moving average when you're in a bullish uptrend. When that starts to change and you start closing below that 50-day moving average, this red line right here, then you're seeing a change. You're going to start to find resistance at the 50-day. It was support in a bullish uptrend. It becomes resistance in a bearish downtrend there, and then there again. We told you you could start shorting on this day, but it's best to wait for a little confirmation, wait for price to start selling off, then you could do it. So the next day we got a little bit of a sell-off, you could take it there, it's a tight stop right here. Right now you have already made a good money on the move to the downside. You can take your stop, it's up here, and move it right over here. You've actually made a good move here, and you can just sit back and let her continue to fall and do whatever she wants to do. If she gets stopped, that doesn't matter. The main thing here is to watch this overall trend that you have right here, this little support area. This is the area that we're seeing in a lot of charts that is actually sideways trading activity. But we're showing you on several of those charts, they've already broken down to the downside. So I would expect to see more of that in the weeks to come. Last but not least is the VIX. The VIX runs the inverse of the S&P 500. So if you're looking at the S&P 500 being bullish, you should see the VIX as being bearish, and vice versa. If the VIX is being all bullish, you should expect the S&P 500 to be bearish. What we can see right now is we are obviously in an uptrend in the VIX, meaning that you had this move going on here with lower series of lows. And then we started to change here, and we started to see this bullish reversal here. We took advantage of that and made some money to the upside here. Then she pulled back, and we expected this 50-day moving average right here that was being resistance in the downtrend to start acting as support. That started happening. And then we started looking for an opportunity to go long. We got a hammer formation here, drew a stop here, but the next day she gapped way up here. We're not going to chase that, so we didn't get that opportunity to trade. Then we kept watching it, but we didn't get another hammer formation here to actually tell us we could get long. So we just missed this opportunity on the long side of the VIX, but that's all right. We made money on the short side of the S&P, so no big deal. What I would expect, this candlestick formation here, tell me to keep looking for a move to the upside, a continuation candlestick here. Tell me to look for the move to continue next week. But I have been seeing resistance here, 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 and here. So this is the level that we want to watch. If you have a major market breakdown, then you're going to break this level in the VIX. But otherwise, if you're going to start seeing some support, and that's channel we've been showing you a lot of charts, then you're going to start to see resistance on the VIX at the same level. However, when those channels break down in those major markets and you start seeing a major sell-off, you're going to see a major move in the VIX to the upside. But I don't want to just buy and hold and wait for that great day to come down the road. I want to wait for good setups. Right now, I don't have one. I'm not in the VIX. I'm just going to sit back and watch for now. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend, aka share our videos online. I'd like to thank all you guys who have been doing that. Our website has been growing. Our viewership has been growing. We appreciate you guys' support. We don't mind doing what we do, but of course we can't do it without you guys actually sharing our videos online, so forth and so on. And also, the bigger we grow, the more we can provide you for free. So it's just a win-win for everybody. Okay? God bless. Take care. Enjoy your weekend and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.